Good evening. This is the post-market recap by AGI Era. Today is Thursday, February 5th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a decisive victory for the bears, with broad market indices retreating significantly. The S&P 500 finished the day down 1.23%, settling at 6798.4. Technically, the index is now trading below the psychological 6,800 level, a key support that bulls will need to reclaim swiftly to avoid further downside. The Nasdaq 100 also saw considerable weakness, closing 1.38% lower at 245.48.60. The Dow Jones Industrial Average finished down by 592.58 points, settling at 4898.72. Crucially, trading volume today was lighter than average, which implies that this move lacks strong conviction from institutional players, potentially setting the stage for a rebound if sentiment shifts, or indicating a lack of aggressive buying interest at these lower levels. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, while not explicitly provided for today's close, likely remains relatively subdued despite the sell-off, suggesting this is a controlled rotation rather than outright panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities, XLU.US, which managed a slight gain of 0.09%, while technology, XLK.US, lagged significantly, dropping 1.82%. This rotation indicates that Wall Street is positioning for a slower growth environment, favoring defensive sectors that offer stability and dividends over high-growth technology names. The spread between these two sectors today clearly tells us that investors are favoring safety. The macro engine room. The primary driver of today's moves can be traced back to the bond market and a series of weaker-than-expected labor market readings. The 10-year Treasury Yield settled at 4.26%, easing slightly on the day from its previous close of 4.278%. This move is significant because this slight decline in yields, driven by reports of increased jobless claims and a drop in job openings to a 5-year low, suggests a tempering of inflation expectations. While a positive for fixed income, it directly creates a headwind for sectors sensitive to economic growth, as it signals a potential slowdown. Meanwhile, the U.S. dollar index is up 0.35%, trading at 97.83, reflecting its safe haven appeal amidst global economic uncertainties and central banks holding rates steady. Crude oil, CL.F, is trading around $63.08, down 3.16% on the day, responding to concerns about global demand amidst a stronger dollar, which makes dollar-denominated commodities more expensive for international buyers. The AI and tech monitor turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day down 1.27% at 171.975. Microsoft closed down a significant 4.97%, while Apple saw a modest decline of 0.21%. Other notable movements within the Magnificent Seven include Amazon, which dropped 4.42%, and Tesla, down 2.17%. Alphabet also dipped 0.54%, while Meta managed a slight gain of 0.19%. The notable weakness in Microsoft and Amazon, alongside other major tech players, is particularly concerning. This suggests a broader reevaluation of growth stocks, possibly triggered by the shifting macro landscape, particularly the softening labor market data, and concerns about future earnings in a potentially slowing economy. Investors appear to be rotating out of these high-beta names as the economic outlook becomes less certain. After hours and look ahead. Looking at the after-hours tape right now, shares of Applied Materials are moving significantly, currently up 3.02%. This could be an early indicator of sector-specific strength or company-specific news yet to fully unfold. As we pivot to tomorrow, the calendar brings us no major market-moving economic data releases. However, investors should specifically watch for any further commentary from Federal Reserve officials or additional insights into the labor market, as today's data has clearly set a cautious tone. The market will be looking for signs of stabilization or further deterioration in economic indicators. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: This podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.